Happy Monday, traders, and welcome to a fresh month in markets. So today's the first day of September trading. End of last week, the big story in the market was what was happening in precious metals, both gold and silver, having a decent spike, a surge on Friday. So gold rallied up and closed at around about 34.50, which was actually a record monthly close for gold. And obviously we are now super close again to those record highs at 3,500. Gold has been range trading now for a good 5 months. Range trading really most of the action around 3,200 up to 34.5, where we are now. So a lot of the gold bulls are getting very excited that we're about to see a break with some momentum, just technically as well, and for much higher levels to come. So at the moment, the sentiment for gold very, very, very bullish. Silver as well. Silver, as we're saying, it had a very good spike on Friday. And it almost kissed $40 silver, so we got up to around about $39.90. And silver again, just like gold, silver bulls are looking for a technical breakout here as well, and for much higher levels to come. So silver bulls getting very excited as well. So look, bias there. Any sort of dips in precious metals, I would imagine, is probably the way forward. So this week, there's a little bit on, but we're probably going to have a quiet start to the week for the very reason that the US has a labour market holiday today. So all their markets are closed, so maybe a bit of a quiet start to the week. But going to Tuesday, the data starts coming out. We've got some S&P global manufacturing data coming out of the US, and then also some ISM manufacturing data coming out for August, Tuesday night. Now, with manufacturing, that global manufacturing number has actually surged. It's up around 53, which is obviously very expansionary, and at the same time, it is something like a 30-plus month high. So it is showing that Trump's tariff policy has been working in that, he wants to bring manufacturing back home and to obviously increase manufacturing. So it'd be interesting to see, and market no doubt is going to be also focused on this ISM manufacturing data to see whether or not that jumps up. So let's watch bond yields tomorrow when those data come out. Last week we did see bond yields sharply lower. Obviously, the 2 years are at multi-month range lows, down around about that 3.6, and 10s are pushing down towards that 4.2%. Moving along on Wednesday here locally, we've got some Aussie GDP data. So quarter on quarter, expecting about 0.5%, which is not a hell of a lot. Year on year, 1.3%, and that's pretty average as well. For quarter two, long run average is it's around about 2%, so that's well lower. Market is looking for wanting more rate cuts from the RBA. Now look, in September at the end of the month when the RBA meets, there's a very low probability of any cuts there that market's priced in, but certainly they've almost priced in a full rate cut for the November Melbourne Cup Day RBA meeting. So look, if this GDP data does come out even a bit weaker than expected, no doubt market will probably ramp up those rate cut bets. But anyway, let's see. But on Friday is the big day for data in the market. We have got US non-farm payrolls on Friday. And it is the payrolls number that we got 1 month ago, beginning of August, and there's revisions for the previous 2 months, which was a record 2-month revision, minus 250,000 jobs that got the market excited about the Fed, starting its easing cycle again, and the Fed cutting rates in September. And then obviously we saw the power pivot at Jackson Hole. That's basically agreeing with the market and opened the door for rate cuts. So it was the labour market data that started this whole September rate cut. And yes, this is the first labour market read that we'll have from that poor August number that came out. So market's expecting around about 70,000 plus for headline, an unemployment rate to actually ratchet up to 4.3%. So look, no doubt with the unemployment rate going up and headline number say under 100,000, if it did come out on expectations, no doubt it's not really going to trouble the market with respect to those rate cuts, because the unemployment rate going up, we are seeing some softening of the labour market. But if that number did come out for whatever reason above expectations, so over 100,000 unemployment rate sitting around 4.2%, market may start questioning it. Really is the labour market rolling over and softening? And I think that the reaction to the market on a print that comes out above expectations certainly is going to be a hell of a lot more volatile than it coming out on expectations. But no doubt, look, market's going to be waiting for the big directional move for Friday, which is going to be obviously the most important day this week. And just one other thing that it might be worth noting is that September seasonally is the worst month of the year for equities. Since 1927, September has been a down month 58% of the time, and it has been a down month with an average of minus 1.6%. So maybe this is not the month to be chasing equity longs. In any case, have a great start to the week. It's going to be a touch quiet with US out, and we will check back in with you shortly.